I think what we are starting to see is that these monolithic, monopolistic megacorps aren't everything that they're cracked up to be. And so there's going to be a certain amount of lock-in that we will tolerate. There's going to be a lot of taxation and policy that prevents its further growth. And all of that opportunity accrues to smaller companies. And so in general, I think that if you are on the side of the David versus these Goliaths over the next year, you're going to have, or well, frankly, over the next several decades, but starting really next year, you're going to do really well. And the middle companies, so the folks that are neither huge nor are small, let's take an example like a Shopify, $100 billion market cap, but by no means is it $1 trillion market cap. Their success comes from enabling, arming the rebels. And so I'm a huge fan of this enabling layer for small businesses, both offline and online.
This is actually why I'm backing XRP. Chamath Palihapitiya, Social Capital CEO. Everyone in the crypto world knows Chamath to be an investment enthusiast and a leading expert as well.
And I'm also fading implicitly Friedberg's pick of Stripe, but my biggest business loser for 2022 is Visa and MasterCard and traditional payment rails and the entire ecosystem around it. So I think that this is the year you can put on what probably will be the most profitable spread trade of my lifetime, which is to be short these companies, and that anybody that basically lives off of this 2 or 3% tax and be long, well thought out Web3 crypto projects that are rebuilding payments infrastructure in a completely decentralized way. Now, that doesn't necessarily mean that what you say won't also happen, both that Stripe will have an incredible IPO and that a lot of these scammy crypto projects will go to zero. However, if you read the white papers of these crypto projects and you systematically put together a framework, I think you can be long those and you can be short Visa, MasterCard, because I think this is their peak market cap.
While all the fuss about XRP's safety is going on, as well as its market valuation, here's what Chamath Palihapitiya has to say.
Man, Visa's market cap is $500 billion, huh? It's incredible.
It's a completely contrived duopoly that doesn't need to exist.
And what does Visa mean to a young person?
And MasterCard's almost $400 billion. So they're $1 trillion combined market cap.
By the way,
that's incredible.
you have to understand that the canary in the coal mine here is pretty significant. The most important thing is Amazon, earlier this year, Nick, maybe you can post this, decided to just shut Visa off in the UK.
Oh, yeah.
Now,
Bing.
Amazon is not going to do something like that, in my opinion, unless it's a test of what they can do all around the world. And again, going back to this idea of arming the rebels, there really is no need today for all of these small businesses to sit on top of Visa, MasterCard, and Amex rails. It's unnecessary.
Chamath notes of his biggest losers in 2022, but hence went ahead to mention that it is necessary for investors who intend to make gains to invest in Web3 cryptocurrencies that are changing the way money is spent and are also decentralized. These cryptos are currently changing how money is being spent on the market and making obsolete Visa and MasterCards. He gave an example of Amazon declining Visa cards in the United Kingdom. Traditional payment rails are losing, hence the need for the adoption of crypto. Chamath claims that the unstable Bitcoin market is associated with 3 problems, where the major problem is systemic risks that have been piling up due to off-chain brokers.
And so it'll probably get developed in the developing world first. This is why I think, focusing in markets like Nigeria, to me, are way more exciting than talking about these fading Western European countries. Who cares?
Right.
This is where this stuff will happen. It's not to say that those other companies can't, trundle along for a while. But when I say, we'll look back in 10 years and their market caps will be materially lower, anybody in those traditional infrastructure and rails versus anybody in this new infrastructure and rails it will look like a no-brainer 10 years.
Do you consider the buy now, pay later companies like Affirm and Upstart or whatever? I don't know if Upstart fits in that category, but some of these buy now, pay later businesses as being the alternative to the traditional payment networks, or do you think that it's a different business?
No, right now, I think what buy now, pay later is a rate arbitrage.
Right.
When, as you said earlier, rates are very, very low, so the cost of capital is low. But it again starts to habituate the consumer experience to, I don't need to pay these usurious rates to these 3 credit card companies to facilitate a transaction. of money that I already have or money that I'm good for. That's the big idea, right? And so when you translate that into Web3 in a good project or a good series of projects, you're not going to need these companies. And so it's going to, I think, eviscerate trillions of dollars of market cap.
Well, not to mention you also have in between these two, Venmo and Cash App, which are not crypto, but they certainly as brands mean more to young people
is why do you think,
than Visa and MasterCard.
Yeah, do you think Block, used to be called Square, is a good pair trade against Visa, MasterCard in this context?
Yeah, I like it.
I think that starts to get closer to the truth. My perspective is you can kind of short anybody who's public, because anybody who's public can really only be public or will go public because they feast off of this artificial 2 or 3% transaction fee. Everybody does. The companies you want to be long are those private companies in crypto that you can read the white papers of, whose protocols have utility, and who's building some element of infrastructure that replaces a traditional business. So as long as you can kind of build those things up, Balaji, for example, had a bunch of tweets this weekend where he was like, he has this idea for a mirror table. What is that? That replaces, cap table management. Right now, why is that important? Well, because it touches all of these really important KYC, AML, investing laws across all these countries in all of these places. It's just a very simple example of where the new company that actually builds that capability of these mirror tables will do so at virtually no cost. And so it'll have a 50-person team. And so they're not going to have offices all over the world. Their cost basis will be, an order or 2 orders of magnitude.
Also, he states that people barely understand what chain of custody means. The third problem is the amount of non-certified and young market observers that come to tell or predict market movements from just watching alone. Chamath notes that these issues can only be solved if Bitcoin is regulated, and states that it is more of a commodity than security, but he wouldn't pass the idea that it is security.
Last point on this. This is not one where I think this disruption happens slow. I think it happens swiftly.
Swiftly being 5 to 10 years?
No, like in a year.
Yeah, Chamath's point is really interesting because there are several billion people globally who do not have credit and who are unbanked. And so if you think about where this is more likely to come from, it's more likely to come from an innovative model in those markets that then ultimately finds its way into the developed world versus, trying to break apart Visa and MasterCard and go get these small businesses to switch out of them and so on.
Because credit card companies demand payment to use their services, Chamath believes a good Web3 protocol that. Thanks for watching. Don't forget to like, share, and subscribe to the channel. Till next time.